zoom out, remove the noise. If tomorrow is not going to be more digital than today, then start worrying. You can also worry at some point about the big cycles. So 2026 is likely to be a down year. Will that happen? I don't know. Most likely. Now, you can either hold on through the down years and keep adding and increasing the value of your portfolio, or you can unload some risk. The time for lifestyle chips are somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal.
The past couple of weeks have been thrilling for cryptocurrency investors as Bitcoin, the world's largest cryptocurrency by market cap, broke through the $99,000 mark for the first time. Although a slight retracement has seen Bitcoin trading above $98,000, experts are optimistic this is just the beginning of a larger bull run with more significant gains ahead. Real Vision founder and CEO Raoul Pal has shared his insights on navigating this exciting phase, which he calls the banana zone, emphasizing the importance of avoiding mistakes and seizing opportunities in the cryptocurrency market. Pal offers a set of simple but crucial guidelines for investors during this volatile period. Avoid FOMO, refrain from leveraging, focus on filling your main portfolio with top cryptocurrencies, steer clear of overdiversification, self-custody your coins, and limit speculative DeGan investments to 10% of your portfolio. He advises maintaining a long-term perspective and taking a step back when market conditions become unclear, ensuring investors can fully capitalize on the opportunities presented by the cryptocurrency industry. Pal predicts the market could grow from its current $3 trillion valuation to $25 trillion next year, and as much as $100 trillion by 2030, representing a massive opportunity for global investors. In a recent update on his Raoul Pal, the Journeyman YouTube channel, Pal shared additional strategies for thriving in the banana zone. He stressed the importance of having a long-term investment horizon, being prepared for inevitable down years, and balancing financial goals with personal aspirations. According to Pal, adopting these principles will help investors navigate the complexities of the digital asset space and take full advantage of its transformative potential.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The other key thing, the actual real hack to all of this, is just hold for a long time horizon. Just holding means you don't do anything. It's very difficult to make mistakes. You're self-custodying, you're not trading, you're not trying to scalp anything. You just hold it. And guess what? Over time, Bitcoin's done about 150% a year, including 3 kind of 70, 80% drawdowns. And by doing nothing, you just compound the returns over time. I like to add to my bags into the big cyclical sell-offs, that once every 4-year down cycle. I like to add, and then your holdings compound and you make more and more money each time. But just have a longer term time horizon. For sure, look at the hourly charts. It's fun. I've got them up all of the time, but I don't trade them. I just hold. I barely do anything. I make a couple of asset allocation switches in the entire cycle, and that's it. And magic happens, and it stops you f***ing up. So try your absolute best not to do anything with your main holdings. Also, zoom out. This space is all about noise. It's called FUD, fear, uncertainty, and doubt. You'll find that somebody somewhere is trying to scare you, telling you it's a scam, telling you it's going to collapse, telling you something is going to happen. The Chinese are going to do something. The Russians are going to do something. Something's going to go to war. You know, all of these things are going to come across your screens every day, and they will make you feel insecure. Remember, this is noise. This is an adoption of technology. And if tomorrow is going to be more digital than today, we will use blockchain rails for proof, for social proof, consensus proof of value, of transferring assets, of holding assets. Everything in a digital world is going to require blockchain rails. It'll be equity markets, bond markets, currency market. It'll be art. It'll be tickets. It'll be anything, any contract is better on the blockchain because you don't need a trusted third party because the consensus mechanism allows everybody to trust it. So over time, the adoption of Bitcoin is huge. In fact, it's still growing at twice the speed of the internet. went back when the internet was in its early days. So something that grows at that speed also goes up in price. So zoom out, remove the noise. If tomorrow is not going to be more digital than today, then start worrying. You can also worry at some point about the big cycles. So 2026 is likely to be a down year. Will that happen? I don't know. Most likely. Now, you can either hold on through the down years and keep adding and increasing the value of your portfolio, or you can unload some risk. And we'll talk about some of that. Don't forget, en route, make sure you take some lifestyle chips off as well. This is a really important concept. I've got another video on this, but lifestyle chips are the ability to take off some profits in things that really matter to you. So if the markets turn around, you don't time the top properly or whatever you're trying to do, you've paid off a mortgage, or you bought the car, or you've bought the holiday. You've done whatever it is that you need for your own life. And you're going to hate selling out when you have to take some lifestyle chips off. But at the end of it, your future self will thank you massively. So make sure you think about that. The time for lifestyle chips are somewhere between December and March. We will obviously get more volatility in the space. Expect 30% pullbacks frequently, maybe 35%. These will happen. Maybe Bitcoin goes to 100,000 and then pulls back to 70,000 and goes up. Don't freak out about it. It's really normal. But remember to take some lifestyle chips off at some point.
Raoul Pal's concept of taking lifestyle chips off the table emphasizes the importance of occasionally cashing out investment gains to enhance your current quality of life. Instead of endlessly reinvesting for the future, Pal advocates using some of your profits to fund meaningful experiences, such as traveling, making special purchases, or securing a better standard of living for yourself or your family. While he champions long-term investing and wealth compounding, he cautions against being overly frugal or neglecting your present well-being in the pursuit of future wealth. Pal also stresses that financial markets are inherently unpredictable, and locking in gains at the right time can provide a buffer against potential downturns. For this cycle, he advises investors with immediate needs to consider taking some profits between December and March, a period when he anticipates a significant market pullback during tax season. According to Pal, securing some gains before such pullbacks can provide peace of mind and greater financial stability as the cycle progresses. By balancing long-term goals with current needs, Pal's approach offers a practical strategy for navigating market cycles while enjoying the rewards of financial success. Check out more insights from his video for additional tips on maximizing opportunities in the cryptocurrency market.
And the other thing is buy the dip if you can. So if it does sell off 35%, you've got a bit of extra cash, buy it if it's not the end of the cycle. If it is the end of the cycle, then you wait till it goes down 70% or so, and then you pile in as much of your savings as you can on top of your existing holdings and let the magic compound over time. Let me tell you a little bit about that, because I've learned that the hard way. So the mistake there was I bought Bitcoin at $200 back in 2013. Amazing. I then rode it all the way down 85% because I knew it was a long-term bet. It then went back up in 2017 and it was trading about $2,000. And there was some FUD, the forking of Bitcoin into two different Bitcoin blockchains. And I was like, I don't really understand what's going on. And so I sold out. So it was the FUD that got me. And I then had sold out. But I was pleased. I'd made 10 times my money. Great trade. I thought, I'd done it well. It then went up another 10x in the last 5 months of the year, which was unbelievable. I've never seen anything like it. I missed that, but I was fine because I'd taken money off the table. I'd taken my lifestyle chips out. So I felt pretty comfortable. The market then falls all the way until 2019. So that was the down year of 2018. And 2019, I started looking at it again. And really in 2020, during the pandemic, when it fell 50%, is when I got back in. I think I averaged in about 6,500, and I'm still long to this day. Okay, so that looks pretty good. I bought it cheap. I sold it expensive. I bought it back cheap. But when I looked at it, and I bought a lot more at the end, the second time around in 2020, when I go back and look at, if I just held my original bet, which was much smaller, I'd have made 5 times the money from trading it. You see, that's the issue here. Now, had I listened to myself and bought the big sell-offs and doubled up my position every 4 years when we had the down cycle, I'd have 25x'd my position. And again, you can only do this in the very top tokens, mainly Bitcoin. but maybe Solana, Ethereum. But really in Bitcoin, that's where you can do this very long term, because Bitcoin is much more secure as an asset over time in terms of its adoption and acceptance at large. Then you can diversify out into riskier stuff. But buying the dip would have made me a fortune. The FUD cost me money. Trading cost me money. I didn't do the hold. You see, so there's a number of ways you can up. You can lose your tokens. That's when an exchange goes down. Or you start using DeFi and you put your money for a yield into some stupid shit, which is what people did in Terra Luna. And again, I did not do that. Or BlockFi or Celsius or all of these things. Everybody lost money because they parted with their tokens. Storing in the wrong exchange. OGs remember Mt. Gox. They still have been paid out. That was, 10 years ago. So that's why I don't like to keep things on exchange. Hold on, let the gains compound. I've also screwed up by having this big diversified bag where I thought, all of my tokens will go up, and I tried to asset allocate. That screwed up, and I've got a wallet of shame like most of you have. And that failed. A lot of people have got wallets of shame from the NFT craze in 2021, and many of you will end up with a wallet of shame from the meme coin craze. So in meme coins, keep it to a small weighting, please. It's great fun. Get involved. But if you've got too big a weighting, you risk losing everything. And then you fucked up with rule number 1, which is don't lose control of your token.
Solana has achieved a significant milestone, reaching an all-time high of $263 according to CoinGecko. This new peak comes more than 3 years after its previous record and highlights the token's remarkable recovery and growth. Solana's journey to this milestone has been anything but smooth. In late 2022, its price plunged to single digits following the collapse of the FTX exchange, which caused widespread market uncertainty. Additional challenges arose in 2023 when the SEC labeled Solana a potential security, intensifying regulatory fears. Despite these setbacks, Solana has displayed resilience, experiencing a year of explosive growth that re-established it as a top-performing cryptocurrency. Solana's resurgence places it among the few major crypto assets to achieve a new record high in this market cycle. For perspective, Solana traded at just under $12 2 years ago, and its current price reflects an appreciation of over 2,000%, showcasing its exceptional performance and the growing confidence in its ecosystem. This dramatic rise underscores the platform's potential as it continues to evolve. Raoul Pal, a notable voice in the crypto space, has been predicting Solana's upward trajectory for some time, expressing confidence in its future growth as a leading Layer 1 token. In a recent tweet, Pal celebrated Solana's ascent, stating, "From the low to new all-time highs, plenty more to go." He also suggested that other tokens like Sway and Dogecoin might follow in the Great Banana Rotation to achieve their own record highs. Do you agree with his prediction? Share your thoughts and observations in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.